Is the real fear finally starting to set in? The market had another ridiculously volatile week last week. Today I'll be talking about that, among a few other things, and today you might be able to hear a bit more of my serious voice. Welcome back everyone, my name's Paul. If you've never seen me before, I started investing about 6 months ago and I've been tracking my progress along the way. I think officially I'm a stock market veteran now because I've already been through one crash and I'm staring down the barrel of a second one. It's ridiculous, I don't get it. If everyone just held onto their stocks, none of this would happen. But the dumb luck is apparently starting to run out and the smart money is laughing its ass off at us. If you look around YouTube right now, it looks like the world has ended, but it hasn't. It really hasn't. I'll get to that in a minute, but first I wanted to talk about Trading 212's Autoinvest beta. Trading 212 released its Autoinvest beta last week. If you were quick enough, you could have signed up to it through the Trading 212 community. They had a post on there where they were asking people to sign up for it. I'm not 100% sure if it's still going. It probably is. But the Autoinvest beta is definitely out and it's on many people's phones. And I must say, at first glance, it's absolutely brilliant. You can create lots of different sections where you want to put your stocks. You can choose to turn on the Autoinvest feature and you can weight your investments so you can prefer some stocks to be invested first over others. But it's absolutely useless to me right now. I can make pies, I can set up investments and I can set everything to go as I want it. But it doesn't have the basic feature of being able to move my current investments into those pies. So if I was to create a pie with lots of different stocks in it and then invest some money in it, I would now end up with two totally separate portfolios. It would be so messy and absolutely terrible to keep track of. So right now I can't even test it out. Even in the beta, it should be a basic feature that you can move your stocks into these pies. You should be able to take them from your main page and move them wherever you want to, and then you should be able to move them between pies. It feels like a very important and very basic feature that's missing. And it's so frustrating because it looks amazing. So it's a real shame that I can't get involved right now. We did know it was coming without this ability, they told us on the forum, but I can't put anything in because I don't know how long it'll take for the new update to come. But when they do finally get round to updating it and they're able to move stocks into the proper pies, I'll be there to review it and I'm sure I'll love it. It's such a shame because I don't like to be too negative about Trading 212. I have the majority of my money invested with Trading 212, so it is kind of in my best interest to say good things about them. I need to point out right here again that I'm not affiliated with Trading 212 and I can say whatever I want about them. But in truth, it's a really good platform. As a new investor, I had to evaluate what I thought was the best investment app. I needed to pick one that was going to hold on to my money for a very long time. I chose Trading 212 and I consistently monitor how it's doing so I can keep my trust in them. Kinda like how I look at a stock. I imagine when I started, if Robinhood had been available in the UK, I probably would have chosen them, because it's very well known in the US and lots of YouTubers use it over there. And Trading 212 is going to see very significant competition from Robinhood as soon as it launches in the UK. We were reminded of this week when Robinhood sent out an email saying it apologises for the late launch. It's very much a reminder that Robinhood is very quickly approaching our shores. Robinhood must be kicking themselves right now because they've missed on a massive influx of customers that could have been coming from the UK and Europe. However, when it does arrive, it's likely to still be the top non-commission app in the country. It simply has the better brand recognition that us millennials require to feel safe. So I've been watching Trading 212 very closely, and I think I've got an idea of what they're trying to do. In America, Robinhood has really only one direct competitor, which is called M1 Finance. From my very distant perspective, M1 Finance appears to be a lot more professional and a lot more clean. It differs from Robinhood because it has a lot more of a structured service with access to different features like moving your stocks into different pies and a groundbreaking Autoinvest feature. Sound familiar? And M1 Finance has made it very clear that it does not think it's going to be going overseas anytime soon. And this is why I think Trading 212 wanted to get their Autoinvest feature out so quickly. Trading 212 is currently a very similar app to Robinhood. It feels very similar and has a very similar user interface. So I'm guessing that if I was a brand new investor and I was approached with Trading 212 or Robinhood, which offer pretty much exactly the same service, I'm going to choose Robinhood because it's more well known. And I suspect Trading 212 knows this and needs to separate itself from Robinhood. And what better way to do that than emulate Robinhood's main competitor in the US? I would love it if Trading 212 eventually cleared up their messy desktop app and made it a lot easier to use like M1 Finance's desktop app. But it's not all good news if Trading 212 heads in the direction of M1 Finance. M1 Finance is a much bigger company than just trading and investing. It has a whole banking side of it, it has a lot of premium side, and apparently it's a little bit slower to execute than say the other apps. On the other hand, it's very interesting to see Trading 212 emulating M1 because it means that Trading 212 has a lot more growth in store for it and it has a lot more access to branches where it could maybe spread out into different financial sectors. It paves the way for a much more secure future and a lot more security for my investments. This is at least what I think could happen. I don't know any of this for sure, but it's some pretty good speculation, right? In other news, the race for the vaccine heated up last week when Johnson & Johnson announced that it was bringing forward its human trials. AstraZeneca has made some similar moves recently, which has led to a huge hike in price. When J&J announced theirs, their price dropped about 6%, which doesn't make sense. AstraZeneca is still holding its price up there as the top FTSE 100 stock. But AstraZeneca does seem to be getting a bit desperate. It's trying really hard to get that vaccine. It's now trying to grab hold of Gilead to find out what Gilead knows about the vaccine. I can't understand why AstraZeneca is doing this when it's in so much debt. It tells me that they might be a bit further away from the vaccine than we first thought. While AstraZeneca has a lot going for it at the moment, if it doesn't get that vaccine, it's going to see a massive sell-off. So it's really in their best interest that they're first past the post. On the other hand, Johnson & Johnson doesn't make announcements like this when they can't back it up. They're not that sort of company, in my opinion. And that's a sign to me that they might be genuinely closer to the vaccine than we first thought. And I think I'm going to buy in a bit more when I can. I didn't want to make a space race comparison, but it feels like the news outlets are already doing that. So yeah, the race is on. And the vaccine is very much as important as the space race because our market recovery depends wholly on that vaccine. We're seeing hints of that second wave in the news, and we're already starting to see selling. If the virus makes a comeback, the UK market is certainly going to crash. The US market is a bit more uncertain because Donald Trump has said that they definitely will not close if there's a second wave. It's very likely that America will shield its vulnerable and keep the economy open as much as possible, which is arguably what they should have done in the first place. And the virus is the only thing moving the market, which is why I want to talk about fear. Fear is now creeping into the market, and this doesn't seem to be genuine bear moves by big hedge funds. This is people trying to get their money out so they don't lose it. And I want to try and figure out what exactly people are fearful of. It's certainly not negative interest rates. Negative interest rates are keeping the banks down at the moment, but it's not touching the rest of the market. It's not the unemployment rate causing the sell-off. It's pretty much accepted now that unemployment is already priced in because eventually everything will go back to normal, right? But the news tells us that we should be worried about it. And it puts a lot of pressure on retail investors like you and I to hold their finger off that sell button. And that's exactly the reason why we're seeing so much volatility at the moment. Because the majority of us retail investors always have one foot out the door. The VIX index is a very good way of measuring this, to give us a good idea of what the volatility is going to be like in the next 30 days. The VIX is commonly known as the fear index, and it's starting to look very similar to how it did in 2008. And with all this news of a second wave approaching, sell-offs are starting to look likely. Volatility is just the market doing something different to what it is today. This changes every now and then, and people see this as risky. But what you need to understand is that volatility is not the same as risk. Volatility occurs when average investors are making decisions based on day-to-day changes. If you're not purposefully day or swing trading, then as a long-term investor, I can't understand why you would want to sell out right now. The only reason I can think of is if you've taken too much risk. Taking too much risk with your money leads to too much fear, and we all know that fear is the reason why markets drop. So in theory, if you don't fear market volatility, you're not going to make stupid decisions. And if you take less risk, you'll be less fearful. Risk relates to the money that you've used to get into the market. If you've used your monthly fuel budget to buy some IVR stock or something, and you're constantly worried it's going to crash, then you've taken too much risk and you're worrying about whether you're going to lose your money or not. As a long-term investor, you need to try and conquer this fear. You need to stop yourself from selling out when things get a bit ugly. And the good way to do that is by reducing risk. I attempt to reduce risk by only spending money that I don't need. And I try to diversify my portfolio, so when some sectors are doing pretty bad, the rest aren't doing so bad, and life doesn't feel so bad. I'm going through this right now myself. I have to make some upgrades to my house. I don't think there's any way out of it. I don't know how much this is going to cost, so I'm having to slow down my cost averaging right now. I might be being overcautious, but I tell you what, being overcautious is going to stop me from clicking sell at the wrong point. I feel like the sell button should be really hard to find or difficult to see, or there should be some sort of thing just stopping you from selling. Anything to just make you think twice before you click it. I feel like the sell button should only really be used if you feel like a company is no longer investable. And I don't mean uninvestable because their share price has gone down. I mean because they've changed their ethos or something isn't going right for them. I feel like my stocks are in a brilliant position right now. They're the best I possibly could have achieved. Selling them seems silly to me, crash or no crash. If the market falls lower, I feel like I'm better to continue buying and average down my price into that crash, because I have faith that the companies that I own will eventually grow back to their previous highs. So the news and social media are all making us feel a little bit uncertain about our decisions right now. And it's because there's so much competition out there for advertising and likes that they're happy to just serve you any old shit. YouTube is no different. We're all trying to make eye-grabbing thumbnails to get you to view, and it sucks. It really sucks. If you're investing a similar way to what I am, then you don't really need to know about the top 5 stocks that are available in the crash. I need to know how to hold on and to block out the news and not listen to all the worrying and all the hurts fuckers. I don't need to know that everyone else is selling out of their worthless stocks and leaving me with some empty baggage. Speaking of stocks, after that somewhat heavier video, I'd like to end it with some light entertainment. And today I wanted to introduce a new segment of mine, which I like to call, Is It Shit? This is a new segment where I quickly run through some of the stocks that you guys have been asking about. These aren't supposed to be in-depth dives, but they're supposed to be a little bit more entertainment. I have, however, definitely looked into these companies and they are actually my opinion. You need to remember right now that I am not a financial advisor. I have no financial credentials. This is not advice, and I am not a growth investor. I approach these companies from a position of safety and long-term stability. With that out of the way, let's get started on the big one. Nikola Motors. Is it shit? Yes, it's shit. Besides the fact that its revenues are basically fairy dust, and beside the fact that it couldn't get any private investors, so it had to do a sketchy reverse IPO, lorry drivers love texting and driving, and these guys want to add a hydrogen bomb to that. If you're looking at hydrogen stocks, you should be looking towards power and manufacturing. Hydrogen is such a huge subject right now. It requires a video all of its own, and I'll be getting round to that pretty soon. Next up, Beyond Meat. Is it shit? No. I can guarantee that not many of the people that have invested in Beyond Meat actually eat their products. They don't actually taste as good as they say. But the Netflix documentary Game Changers told us that our blood needs to be see-through for some reason. So this company will do well if it can increase its scalability. I don't think plant-based is the future. I like Tyson Foods. They're investing in lab-grown meats And that technology is very quickly becoming real. Next up, Aston Martin. Is it shit? Yes, it's still shit. I can't even say this with a straight face. Yes, it's still shit. Aston Martin is basically an F1 company now. And in order for it to achieve, it needs to consistently make podium. And we've come full circle back to it being gambling. Next up, Hertz. Next up is Hertz Rent-A-Car. Is it shit? Yes. I had an interesting conversation on the Discord the other day. We ended up equating Hertz to dangling your balls over a vat of acid. I don't think I need to go much more into that. And finally, Lloyds Bank. Is it shit? No, it's not shit. But now might not be the right time for banks. If another debt crisis is coming and interest rates go negative, then we're going to see something like 2008. And if you have a good look, Lloyds Bank didn't recover from the 2000 dot-com bubble. And then it didn't recover from the 2008 crash. So I can't see why it's going to do any better right now. Thank you very much for watching, guys. If that segment does well, it might become a little bit more regular. I spoke a lot about Trading 212 today. It's the app I use, and if you wanted to sign up for it, there is a link in the description below. If you sign up through that link and make a deposit, you get a free share. There's a link in the description to the Discord group as well. We're all having a lot of chat in there. It's been very good recently. And if you found this video useful, please feel free to like, subscribe and invest.